What's up, everybody? Zach is back with another episode of Journey to $1 million. Thanks for tuning in. Go ahead and smash that like button, subscribe. I need 1,000,000 likes on this video, guys. I'm pretty sure we can do it. But anyways, the blog is posted to prostockadvice.com. I'm actually a little bit early today, so let's go ahead and jump right into it. Well, we had a little bit of a choppy day with the Yelen and the Powell speech. I mean, both of them, well, not even really speeches, but both made comments on the current state of the market and the economy. And pretty much in summation, both said that everything's fine. They're not going to do anything, although they think that a lot of the asset valuations are a little bit high. So with that said, let me read you a quote from Yelen. I think that in an environment where asset prices are high, that what's important is for regulators to make sure that the financial sector is resilient. So, I mean, that's kind of interesting because it makes me wonder if the financial sector, the bull ETF, is going to make any moves tomorrow, since that is obviously Yelen's goal, is to make sure that the financial sector is resilient. So I'll be watching the FAS, the Financial Sector 2X Bull ETF. See if we're gonna make any moves tomorrow, but it's actually a little bit down right now, so it could be pretty interesting. But I mean, overall, if you look back over the historical graph of the stock market, no matter Dow Jones or S&P 500 or Nasdaq, I mean, you're gonna see that, we've always seen exponential growth. It's never a time. I mean, obviously, sometimes markets pull back, sometimes they crash 30% or more. Some periods go through cool-offs once every couple years, or even a few smaller ones per year, which is always very healthy. But overall, the general trend is exponentially growing faster and faster. It's just always been like that. And if you look at this triple Q historical chart, and this is since the early 2000s, I mean, it's been growing really well. And of course, it's pulled back in 2008 a little bit, but ever since the .com, and even before that, if you look, it's exponential growth. So if we are zoomed in looking right now, but if in the next 20-30 years, if we zoom out, this part is probably going to look more like this part down here, right? But that's just how it is. It's always more and more exponential. And that's how the stock market is set up. There's not supposed to be a ceiling. If stocks get really expensive, like $3,000-$4,000 a share, and they'll split, or if they get really low, then they'll reverse split. So I mean, it's always set up so that there is not any ceiling, and I mean, it's always is exponential if you do zoom out far enough. And here is the S&P historical chart I have pulled, and this chart was starting in the 1930s. There was a period where it was pretty choppy, obviously since the Great Depression. But as you can see, we've consistently, if we draw a curve on this, it looks more like an exponential increase in the rate of growth, averaged out. But also, if we look at Dow Jones, it's also like that as well. And same with the Nasdaq. So that's not really a surprise. So I mean, of course they are talking like this right now, and I don't really see any concern with that. It seems pretty normal to me. Like, for sure there's going to be periods like right now where we're cooling off a little bit, but if you zoom out far enough, this is pretty tame compared to some other ones, on the Nasdaq at least. Especially like .com or 2008, or even the COVID one, or the one in 2018, actually pulled back for a few months in a row. So, with that said, I think that there will probably be maybe a little bit more choppiness coming up, maybe towards the summertime. But overall, I think that we're probably going to have a better month in April once we get out of March. And of course, call it what you will. I don't think that it is a crash, and even if you say it's a bubble, I think that the bubble is about to get a lot bigger, probably over the next couple of years, especially with all of the trillions of dollars of stimulus that they're injecting in the economy right now, and that they have been. I don't see any reason that this is going to slow down. And most of the talking heads and the financial gurus are, and hedge fund managers and whatnot, they are talking like it is not going to slow down. It's about to heat up a lot. No matter if it's tech, cyclicals, oil, financial sector, whatever. Like just in general, it's about to heat up. Of course, what should we be in? Should we balance our portfolio with some good tech plays on discount? Should we buy into the financial sector a little bit and possibly even a smaller percent in oil? I think that sounds about right, though. A lot of the big hedge funds, they are balancing around 50-50 between the cyclicals and tech plays. For me, I prefer to, since I don't have unlimited money, like billions and billions of dollars like some of these hedge funds, I prefer to be definitely heavier on the tech side because these are my long-term 5 to 20-year plays. And but with that said, anyways, the S&P 500 was down almost 0.8% yesterday. NASDAQ was down about 1%. Dow was down about 1%. I mean, it's not so bad. My portfolio is down almost 21, which is only 3.3%. And so I'm actually still up for the week. So I'm feeling okay about it. I mean, most of that is due to SOXL, which is known to be pretty volatile. So that's okay. I mean, I really believe that I'm setting up for some money printing action of my own coming up in this summertime or towards the end of the year. I think that the work that we're putting in right now and the dollar cost averaging that we're doing right now, and I guess you could say diamond hands, just holding these positions while they're going down. Seeing all these unrealized losses might mess with your head a little bit, but I really think that we're setting up for some really big gains coming up at the later part of this year, because eventually the money will have all flowed into the cyclicals or out of the cyclicals or into tech, out of tech, whichever way you want to look at it. I mean, who really knows? It's all up and down, back and forth right now. Nothing seems safe. But I mean, eventually we'll get past that period and we'll grow back to steady growth. Sometimes markets go down, sometimes they're choppy, and sometimes they go up. So at first it was going down time, and then it was choppy roller coaster time right now. And eventually it will go back to normal growth. And with the stimulus and with the vaccines and with the opening up of the economy, I think it's going to happen. And I think it's going to be sooner than later. But nevertheless, I'm not doing so many options plays right now. As far as I think, and what I've always recommended is that options are a little bit risky in times like roller coaster are going down. So I would cut all that, take the money, raise the capital, put it into dollar cost averaging into your long-term positions. I probably sound like a broken record if you're following along, but that's what I'm doing. I'm not just posting, 100 different option plays a day, so I get a lot of likes or a lot of interaction or engagement. I don't do that. I do exactly what I'm doing with my own real portfolio of money. And if I'm not making any options plays, I'm not going to post any. And that's what I do because I think it's just a little bit too risky since nobody really knows what's going on right now. Although I do have a couple and they're going all right. Like the FLGT, thinking about getting into a CBD one from yesterday. Go ahead and check out the link in the description. If you're already on the website prostockadvice.com, go ahead and go back to yesterday's blog to check out this CBDT really, 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 really cheap retail plate. But anyway, so I'm just doing the real thing here. Trying to keep it real, trying to keep it open. Everything out in the open for better or for worse. But anyways, guys, if you're not already in the Discord, go ahead and hit up the Discord link in the description. Follow me on Twitter. I'm posting all the live trades there. And also, if you're wondering what platform I trade on, it is Webull, and they are doing a $500,000 giveaway right now. If you collect some cards, which you have to do a couple of things, which are really easy, like set a reminder on Webull. You go into their social, follow a couple of people, and you can get these cards. And all you need is 5 of the cards, and you will share the $500,000 that they're giving away. So I mean, it's pretty much a win-win since I'm already doing those things anyways. But yeah, nevertheless, you're also going to get 2 free stocks if you deposit $100. So guys, with that said, I will see you on the other side. Peace.